Hello. This video, I'm going to talk about the difference between incremental method and the proportional method. I'm gonna going to do this video by show you why one very typical example, and then I'm trying to really talk about the mechanism between these two different methods. So when we need to use incremental method versus proportional method, normally is when we have a scenario when there is a transaction, it's a lump sum transaction. It can be sales and it can be purchase, but they all have something in common, which means there are multiple items within one transaction. So the example I have today is a lump sum sale of stocks with bond. So the company issue one securities and which is 10,000 units. For each unit, it has one bond and also 10 shares of common stocks. And therefore, as an accountant, if we wanted to make a journal entry, we needed to be able to separate and allocate the value of this insurance to each type of securities. So here, if we're going to use incremental method, and the first thing we have to do is we have to decide which security we're going to allocate first. Before I move on, I do want to talk about what kind of information we have in this question. So here, for each unit of the insurance, there are one bond, and the bond is $500 par value. Par value is just a fancy name for face value principal. Now, the interest rate is 12%, and this 12% is a stated rate. It's a subordinated debenture. Debenture is another fancy name said that's the bond contract. Now, we also have 10 shares of common stocks. This common stocks has a par value is $5. And here, for each unit, and it is sold to outside investor for cash at $880 per unit. So if outside investor pay $880, they will get a 1 share of bond and 10 shares of common stock. Now, let's take a look at the information on the market value. For the stocks, we know prior to this sales, the 2-week ask price is $40 per share. And for the bond, the question said 12% is a reasonable market value, which means market value is equal to the stated value. Therefore, the fair market value or present value, market value, they all refer to the same thing. And at this point, they should equal to the par value. Now, if we're going to start with incremental method, and first we have to decide which one to allocate first. Because what is the incremental method? Incremental method basically said we're going to allocate the proceed to the first security based on its market value, and the residual goes to whatever left over. Okay, so here now you have two securities, which is the bond and the stocks. Let's take a look at the price. For the bond, we know the 2 weeks ask price prior to the sales, and for the stocks, we know the 2 weeks ask price prior to the sales. For the bond, the question said, hey, 12% is a reasonable market value today. So if you're going to use incremental method, then between these two, which market value is more objective, is really reflect the true fair market value? I would say it's the bond, because the bond is talk about the value of today, and the stocks in contrast is a 2 weeks price. Okay. Therefore, if you're going to use incremental method, you should start with the bond first, which means we're going to allocate the proceed to the bond based on its market value, and then the leftover goes to common stock. All right, now let's take a look at exactly how much we should allocate. Remember what I said, using incremental method, we are going to allocate the proceed to the bond first based on its market value or fair value. And therefore, we have to decide what the fair value is. Lucky for us, in this question, it makes it super easy. It said the market value at this point equals to the par value. And therefore, we know there's one share in each unit, and the market value is 500. And therefore, we're gonna allocate 100% based on this $500 market value. Okay, so exactly how we're going to allocate. We know entire issuance is 10,000 units, and each unit you sold for $880. And for the bond, the market value is $500 per share, and each unit has one share of bond, and therefore you have 10,000 units of a bond, and multiplied by $500 per unit, so you have 5 million. And that's how much we're going to allocate to the bond first. And the leftover is 3.8 million that goes to the common stock. After you figure out how much to allocate, the next step is the journal entry. And the journal entry, we're going to start with cash first, because that's the most objective and easy side of transaction. And as an issuer, you receive cash, and therefore you're going to debit cash by 8.8 million, which is just equal to 10,000 shares multiplied by $880. Now, I'm going to start with the bond first, because here the fair market value is equal to the par value. It implies there's no discount or premium. The fair market value or the present value of the bond is just equal to the par value. So here I can just credit the bonds payable, 5 million. And next, when we move to the stocks, we know the total stocks is 3.8 million, because the stocks has a par value. Therefore, common stocks account will get a 500,000 credit, which is 10,000 units. Each unit has 10 shares. Each shares with $5 par value. And then the leftover should be captured by paid-in capital in excess par common stock account. Next, what happens if you decide to use the proportional method? The difference between proportional method and the incremental method is the proportional method is going to allocate based on the proportion of the market value. And therefore, it's not that we're going to allocate which one first. Instead, both bond and common stocks will be allocated based on their market value. So here, of course, the first step before we can use the proportional method is to calculate what are the market value for if each bond or stocks were issued standalone price. So first, let's take a look at the bond. The bond, for each unit issued, you only have one share in the unit. The market price, which is the fair market value of the bond, is 500, and therefore total market value is 500, and for 1 unit issuance. And for the stocks, 1 unit, you have 10 shares, and the market value is 40, and therefore for 1 unit issuance, and the stocks is 400, and the total market value for 1 unit issued is 900, and therefore the allocation percentage for each unit should be 500 divided by 900 and 400 divided by 900 for bond and stocks respectively. So last, how we're going to do the allocation. Now we know the allocation percentage. We also know the total lump sum receipt, and then we just need to allocate it based on this percentage. And therefore, for the bond, you will get a 4.888 and $889. And then for the common stocks, will be 3.911 and $111 dollar. So you can see here, all the allocation is based on the percentage of the market value. And now how we're going to do the journal entry? Journal entry, again, we're going to start with the cash. debit entire proceed. And really depends on what you like. We can start with bonds payable because we know the bonds payable is always the par value, which is 10,000 shares multiplied by 500. And then we also know the total amount allocated to the bond is 4,888 and $889. And therefore, we need some account on the debit side, and because the discount normal balance is debit, and we know we're going to use the bond discount account. And then here, when you debit this account, then the sum between bonds discount and the bonds payable should equal to 4,888 and 889. And now, next step, we're gonna allocate to the stocks. And the stocks, again, we have two accounts. First, the common stock account, which is decided by the par value. And the leftover should be captured by the paid-in capital in excess of par. And you can see here, if you add the common stock and the paid-in capital in excess par together, it gives you 3,911 and $111. So that's all. And we're going to use this method in many occasions in accounting, in revenue allocations, and in cost allocations. But in general, both methods are acceptable under US GAAP. So that's all.